Bring in now Trey Knippa from Lotus Brokerage. He joins us from the CME. Also with us is William Greiner, Chief Investment Officer of Scout Investment Advisors, which has $19.5 billion under assets under management. He is in Kansas City. The markets team standing by as well. We've got Adam and Dom right over here in their little red stools. Bill, let me start with you and ask you about the situation in Egypt. We see the markets affected pretty seriously by it today. How do you position yourself for something like this?
Well, I think whenever the world is focused on things other than the world's income statement, what I mean by that is GDP, inflation, interest rates, corporate earnings. Whenever the world's focus really shifts to something else besides those issues, we seem to swoon. And this has been going on now since the low in 2009. And the way we're positioning ourselves with this in mind is we're finding a lot better value within our global operations here in the United States rather than in, for example, Europe. So we're overweight our exposure in the U.S. Currently as compared to foreign markets.
Let me jump in because, you know, Matt and I have been watching this video. I mean, the protests, it's hard to, you know, ignore them. I mean, these are countries in turmoil. Sure. You say it's hard, you know, that we kind of just swoon. Isn't it more than just a swoon? There could be significant changes in many of these countries going forward, especially if we start to see it, you know, trickling to other countries. Is it just something we just kind of blow off here, or isn't it something more significant?
No, I'm not saying you blow it off. 2 days ago, as a matter of fact, we came out with a piece suggesting from a technical standpoint this market was due for at least a 5 to 10% correction. Now, I couldn't tell you 2 days ago that we're going to see these riots in Egypt really erupt and carry things to the downside, but I think the market was very well set for a significant shift on the downside. I'm just saying that whenever the focus shifts away from GDP, we should expect the market to swoon and move to the downside. I don't think this is the start of anything major, at least for the markets, at least at this stage, because it looks like to us at 1,200 of the S&P 500, we run into pretty strong technical support.
Hey, Bill, it's Adam. Let me jump in here. You know, we can sort of speculate as to whether the market may take a correction 7, 8, 9, 10%. And that sounds fine, but when it actually happens, it's scary. So for people at home who are watching and wondering, what do you do? Tell us, what do we do at this point if there's a possibility of that kind of correction?
Well, you know, one area that we've been really keen on over the last, let's say, year or so, as far as fundamentally is concerned, are technology stocks. And looking at tech right now, I don't necessarily think running out and buying tech today would be the right thing to do, but watch the market. If you feel the market's going to start bottoming, you know, this is an area that is showing very, very strong earnings momentum, and I think that earnings momentum is probably going to continue. So we would look at it from the standpoint of looking at this from an opportunistic standpoint rather than from a fear standpoint.
Hey, Trey Knippa, it's Dominic here. One of the things that we want to kind of look at here, a lot of traders saying that the emerging markets indices have not been participating very well in the last few weeks here. This is another dip here for a lot of these frontier emerging markets. Is this a buying opportunity in your opinion, or is there more pain to come from places like Egypt, Tunisia, South Africa, maybe even something like that?
Well, considering the products that I trade and what I focus on, I focus mainly, say, on the S&P futures rather than cutting it up and going after specific indexes on some of those emerging markets. But this morning I was a guest on the Bloomberg terminal, and I was talking about how the really poor action in crude oil the last few days really gave me a moment of pause in S&P futures and in stock indexes. And so I was starting to get a little bit edgy. I'm not saying that I called today's sell-off because obviously I didn't see what was coming in Egypt, just like the previous guest talked about. But the action in crude, now one would say, well, Trey, you're completely wrong now because now crude is rallying. The problem that I have with today's rally back in crude is that the forward spreads, you're not getting as good a leadership from the front month of crude. I think this is only event driven, and the fact that the March contract is not gaining on a lot of the back months kind of gives me a weak underpinning to this rally, and it wouldn't surprise me at all if things calm down over the weekend, if you saw crude go right back down, especially after this big sell-off in equities.
Hang on a second, because I want to bring it back home a little bit here to the U.S. We've been talking about Egypt, at least for the last hour on this program, and pretty much most of the day, obviously. We're in day 4 of the riots there. It's a very serious situation. General Mubarak faces at least the possibility of being brought down by what we think are about 500,000 people rioting in Cairo. But we cannot ignore the data coming in from the U.S., and Adam Johnson has been taking a look at today's economic data for us. It's not all bad news when you look at it back here at home, is it, Adam?
No, as a matter of fact, it's not all bad news. The fact is, this was the best GDP report in the past 25 years, and it was the best report specifically because companies are buying again, all right? So as a result, you did not have the inventory build that you had over the past several quarters. That is very, very key. Companies buying again. You add to that the fact that we did not rely as much on imports. In other words, we consumed our own goods, and it meant that the real sales component of GDP was up 7.1%. You got to go back to 1984 to see that. So, again, a very tough day, and the market got hit, obviously, on Egypt. But, you know, if you dig a little deeper, Matt, it's not all bad out there.
All right, Adam, thanks very much for that. We want to, with that in mind, bring Trey Knippa back as well as Bill Greiner. Bill, you know, to your point earlier, and to Carol's as well, obviously it's a very serious situation in Egypt. But even if there's a regime change there, even if that doesn't work out so well, what fallout do you expect that to have on equity markets?
Well, if the regime change, if it does happen, I think one of the concerns that people have right now, obviously, is that nobody really knows what that regime is going to do. And they don't know what regime is going to be installed if we do see a change. And so that uncertainty really is creating this volatility in the markets. And like, as I said before, if we look away from GDP, which we're doing right now, if we look away from interest rates and corporate earnings, this is when the market swoons. And until we get our focus back on those income statement items, is when the market continues to move to the downside. I don't suspect this is going to be a long-term issue. I suspect this is going to be basically taken care of over the next, I don't know, whatever period of time, but not that long. It's going to be interesting watching the news wires this weekend. My guess is that the markets may start to have a little different temperament sometime next week.
We got to run. Bill Greiner and Trey Knippa, guys, thanks so much for walking us through the close.